What's going on, guys? Good morning. Get started in a minute. Hopefully everyone's doing well. Give me a quick sound check. Good morning, good morning. It might be too early for a lot of people. I should look into like YouTube's analytics and see where the majority of my viewers are based out of. Get started in a minute. Sound is good. All right. Let's change the screen. One sec. Oh, I didn't even, you know what? I didn't adjust something. Hold on one second. Oh, it's fine. Okay, good morning. How's everybody doing? It is just after 8 a.m. New York time. This is going to be the beginning of what will continue into the future, regardless of the baby or not. Obviously, there'll probably be a time where I take a couple mornings off. That might be in the near future, right? Because baby is coming on December 28th. But this will be something consistent moving forward. So for those of you who've been following for a while, I did the on block roots. I had a series of live streams called The Desk, where we obviously covered more or less everything in crypto, a little bit of what's taking place in legacy, and you know, it wasn't really any different from previous live streams, but this will be consistently on Monday through Friday, so every day of the week besides the weekend, and it'll be from, I'd say, 8 a.m. to no later than 9 a.m. So I don't want to run this longer than an hour. Doing a live stream for over an hour kind of gets exhausting, especially when you're looking at the chat as well. And also, it's honestly a waste of your time. You know, people run 2-hour long streams. I could definitely run 2-hour long streams because I could go off on tangents, and you know, for anyone who's been following, I could circle back to points half hour later after making them. But ideally, in some kind of stream, there's maybe 1 or 2 Easter eggs for you to get out of it. A little bit of nuance, a little bit of insight, and that's that. Most people don't watch the entire stream. I mean, if you look at the average viewership, it's never going to be the full extent of the stream. So that's my excuse as to why I'm not going to be streaming for a long time. But you know, these are pre-market streams, so the market's going to open up an hour and a half from now. There's usually a little bit of a pickup in activity around 8:30, and then leading up to 9:30, there might be a few trades that are on the table. but definitely not going to run this through the open. So for those of you that are new, please subscribe, hit the like button. I'm sure everyone knows who I am on Twitter by this point, but the links are below if you are interested in following me on Twitter. Shout out to partners at Phemex. So the link for Phemex is below as well. I talked about something that was going to be announced this week. Last week, I deleted that tweet because I think I jumped the gun with that announcement. But this week, they'll be announcing a new incentive or a new reward, new bonus structure for signups. And if you did sign up, like if you sign up today, so the link is in the description below. If you sign up today and you sign up before getting that bonus, just reach out to me, and I will. I'll make sure that you get some kind of bonus, because they are running a bonus right now. But in this transition, I'm not exactly sure what the details are and what that current bonus is going to be. I know the new one is going to be like twice the previous, but like I said, I can't really get into details. I don't want to spoil that. All right, so in these streams, I'm going to take a look at some of the opportunities that I think are on the board for the day. Cover some of the stuff that's obviously taking place over the weekend, last Friday as well, being that today's a Monday. Cover a little bit of current events, things that I think are important, things that might possibly drive narrative, possibly drive price, and that's that. So none of this is financial advice, right? Strictly for entertainment purposes only. I try to keep it entertaining. Just going to go over some of the things that off the top of my head are one of them is kind of funny, the Trump NFT. So I'm not going to be one of those people that says, it's coulda, shoulda, woulda with everything. Been around long enough now, knowing that, I know that rather I'm going to miss plenty of opportunities by being here for a long time. This was possibly the best opportunity in the bear market so far, and it was the best, I would say, and the easiest, most obvious play. And I say that because Trump obviously has a big pull with a very large group of people, and this group of people extends outside of crypto. So this was brought to the table in a small group chat that I am in. Not going to dox anybody in it or what chat it is, but a very small, intimate group. This was brought up, and the website was shared. The website was shared, and you had to go to the website and register through it, and you could link your crypto wallet, or you could pay with a credit card. So this was something that the public could easily access. And if you bought 100, you qualified, or you basically purchased a dinner with Trump. Who knows what kind of dinner that is? It's probably like a big conference room where everyone sits, and there's 1,000 people. It's not exactly an intimate dinner with Trump. But then there was also a way which you could go to, this was on Polygon. You could just mint them yourselves, right, through the contract. And I was doing this, and I had bridged over money from ETH, and I was in the process of minting, and I wanted to mint 100. I think there might have been a limit, but I wanted to mint 100. And when you bridge over, you get, I guess, a little bit of gas dropped. But for whatever reason, I don't know, maybe I didn't have enough. Something got in the way, and I just kind of said, in that time being, where this was one of the most obvious plays, right? The whole of social media hadn't caught on to it yet. This was going to extend outside of more than just people that are native to the crypto market. This would have, appeal to people that are just Trump fans. It's not like there was a very small supply or very low float, but it wasn't egregious. Wasn't egregious either. So in that time being where my transaction didn't go through, and then I realized that I didn't have enough gas, and I had to go do something with my wife, I kind of just said, you know what, fuck it. That's, maybe this is a sign. And then shortly thereafter, there was something posted about how, they weren't, the NFTs were released, and they weren't part of, he was not part of them, or some kind of, I don't know, something was posted along that lines, and I kind of pat myself on the back, because after that, I think the value quickly, the floor dropped below the price, which was the initial price was $99, and then the floor was, something 20% below that. So I felt good about myself. And then these proceeded to, I think they reached a maximum floor price of, 0.82 ETH. So we're talking in the realm of $900. So that was something that was super obvious, and I missed out on it. And that's just, listen, that is what trading is. NFTs are not my area of competence, not something I am very interested in. I bought a bunch of NFTs, but I'm not an NFT trader by any means. Another thing to still focus on right now is I want this to pass because it's just one of those dark clouds over the market right now. But the Binance FUD, I'm not going to get into it specifically, but you could go to DeFi Llama and you could focus on all the exchanges right now. And you could see that there's still outflows out of Binance that I think are a little bit out of the ordinary. It's not like we've seen a major recovery from that. It is kind of a drop in the bucket still. So it's not like this wasn't a real bank run on Binance. But this is just a reminder, like even, again, I share Phemex, right? I think Phemex is a very reliable exchange, got great execution. There's exchanges that have better liquidity than it, but most people are going to be spread out in this market either way. But that being said, I personally am someone who, I do not keep my crypto on exchange, right? A significant amount of it, at least. I only put enough on the exchanges to trade on behalf of what I have in off exchange amounts. So for me, being someone who does a lot of trading, this means using leverage, right? But not using leverage to capture more of what I would normally trade, but using it rather to just replicate what I would normally trade, right? So, my positions might have a closer liquidation value now, but I'm not, I'm only putting the bare minimum on exchanges to represent what would be my normal position sizes. And this is for good reason, because again, FTX seemed like the safest port in the storm, right? And this is just more of a reminder that you should never say never, right? So Binance, different story. The level of fraud that was taking place at FTX, I think, is well out of what we're talking about with maybe what is taking place at Binance or what people are speculating is taking place. But again, I don't want to start speculating on that because that's not something that I dive into often. That's not, I am not a sleuth or a exchange detective by any means. So, but something to keep an eye on because right now the market is in a very sensitive place. Another thing to keep an eye on, and this is something that began to catch a little bit more light on Friday, and obviously this is something that's been, kind of at the table now for the last few weeks, is the Genesis and DCG, Barry Empire drama. This was on, I believe it was on Friday going into the weekend. There was, I guess, some kind of update with respect to their bankruptcy or that whole process. I don't know exactly where that sits, but the possibility of them needing to sell assets, and they have many illiquid assets, was, I guess, a little bit more front and center. And we saw things that were in their portfolio, and their portfolio is public. You could go to like a bunch of different aggregators, but Masari is one of them. And you could look at sort of what they've invested in, what they've touched. And if you were to look at those alts leading into the weekend, you would have seen that there was quite a substantial sell-off in those with respect to other alts that was sort of outside of what normally would be expected, right? So certain assets have, predictable relationships, similar beta to each other. And, we saw things like one of them was, I don't know exactly what the relationship is. And this doesn't necessarily, so this is a Filecoin, in a matter of minutes dumping nearly 40%. This doesn't mean that because these assets, we're looking at these and they've been in a downtrend for a really long time. This, by the way, this grayscale DCG watch list is not exactly perfectly accurate because I have some other stuff in here as well. I think this list is obviously there's a much lengthier list that is public again, but it's possible that people are front running, right, what they anticipate to happen. I think that, listen, there's a lot of fear in this market right now. I personally short a couple of these. I actually just closed out a near short last night while watching 1883, which is, it's done now, but it was a phenomenal show. But I wouldn't get too focused on these because these might continue to, fall off a cliff, so to speak. But these are extremely liquid, right? They're extremely illiquid. Did I say liquid or illiquid? They're extremely illiquid. The snapback from a bunch of participants closing out shorts, these are the kind of things that can move, 50, 100% in a matter of minutes. So for me, it's like, if the setup is there, if we do have some, breakdown scalps I could take advantage of, then I will keep them on my radar. But for the most part, yeah, I expect these to trend down over time. Some of these are, for example, like NEAR are nowhere near, I think, what would be a reasonable support. Support. So, for example, if we're looking at NEAR on the weekly chart, has lost a major weekly pivot in the last few years. Looks like a minor retest of that structure. Minor meaning we haven't had much time spent under there. So we had a throwback. Looks like continuation. Looks like the next major area would be around, $1. But even though I have an idea of maybe where price is going to be over time, it's not necessarily the case that you're going to be able to define an attractive trade on behalf of that. So maybe, as GCR said, inverse investments, but you have to have a significant amount of margin. And I don't think that it's the case right now that I would want to have much, again, on an exchange to hold a position that has a really wide pain point or, a liquidation value that is nowhere nearby. And again, if you're going to short these and they move 100% against you, it's not like it leaves much room for people to shake that off, except for people that are very cushioned with a significant amount of collateral and capital on the exchange. One other thing, a couple other things to point out. It's 8:15, so we're doing good on time. It's the end of the year. So for me, for example, I'm not going to be getting aggressive at the end of the year. There's no reason. I had a good year. So I have to say that I had a good year. I am up on the year. Nowhere near, obviously, up as I was last year, but I feel like I did a good job this year, and I don't want to, I'm thinking personally, I don't want to mess it up. At this point, it would relieve, what the current tax burden is, but it's the end of the year, and I feel like, listen, I have a few things coming up. We have holidays coming up. I have personal things coming up. So I myself already have things that are reason enough for me to take a little bit of a less aggressive approach at the market, and obviously conditions kind of warrant that as well. But towards the end of the year, you could expect that a lot of people are sort of going to be behaving this way as well. So if you had a good year, maybe it's a good time to do the boring work I should say rather, if you didn't have a great year, maybe it's time to clean up your desk. Maybe it's time to look over, some of the finer parts of your year, some of the worst parts of your year, see where you could do some housekeeping, right? And get ready for the next year, right? To get ready for January. So I don't think there's any reason to force it right now, because I don't think anyone is forcing it right now. If maybe some people are throwing Hail Marys, but I am not one of them. All right. So last point, what I wanted to touch on. So I'm just going to touch on this in a second. So yeah, I'm not really focused on building any positions right now. One thing to mention is I got rid of the Sol spot positioning that I began to build once it came back down to my entry. So I was talking about this. I want to, build a position in Sol, start dollar cost averaging. I changed my mind very quickly. I don't think it's necessarily the case that anyone should be looking to build long-term position in alts right now. I think that the best time for alts is always going to be when BTC has already gone on a run, when majors have already gone on a run, and there is, more of a wealth effect that's going to spread across the market. I'm not a picker. I'm not someone who could tell you a lot about these projects from a fundamental standpoint. I don't do a ton of research on them. Most of my trading is technical trading. It's intraday trading and momentum trading when there is momentum in the market. And that is when I will have more long-term positioning, when I will be placing more long-term positions in the market. And it's just, there's no reason for that right now. There's no call for that right now. The environment is, non-accommodative. It's very choppy. I would expect it's going to be choppy moving forward. So I just think that it's a good time to probably research, right? Definitely always a good time to research, but I would be very careful right now about making any long-term bets, right? That's just me. So that's my opinion. Again, don't want to give anyone advice, don't want to influence anybody, but that's just what I'm thinking right now. Because I'm not 100% certain, right? No one should be 100% certain either way. But one other thing. So what was I going to talk about? Two other things, actually. We'll take a look at Doge. And we'll go into sort of how I'm looking at today and what opportunities I'm looking at. Where is Doge? So we talked about this in a couple streams now. You know, Doge retested key weekly level quite successfully, right? The bears did it quite successfully, selling this level, acting as resistance. The reason I wanted to point this out is because one of the reasons why people were sort of holding out and possibly building a longer term position, at least in the near term, even not the short term, not the very long term, but was because the expectations with Elon would be that with, you know, a revamped Twitter Blue, with something set up for content creators, with a little bit more of an elaborate system for tipping, possibly, whatever they're doing, allowing content creators to more or less monetize, that he would, you know, integrate Doge. I think that this would probably be a lot of work for them, a lot more than necessary, whereas it would be easy for them to just integrate some form of dollar, right? Or their own kind of representation of that, their own token. I don't know. The point is, when Elon was not on shaky ground, this was kind of the assumption, and, you know, not on shaky ground, right? He's still at the head of Twitter, but I think his antics recently kind of paint a clear picture. But when things were good, right, and, you know, it seemed like Twitter was going in a good direction, or, you know, possibly, yeah, and I'm just talking about with respect to possibly integrating Doge, this trade was already kind of failing. And now I'm a lot more skeptical of it. So, and that's even before any of his sort of behavior recently. And I'm alluding to the fact that he put up another poll and we know he makes his decisions based on his poll. He stuck to his word last time. Even before that, it seemed kind of lofty to assume that he would choose Doge as like the Twitter currency or whatever. That'd probably be a pain in the ass. For the same reason it would have been a pain in the ass for Amazon to integrate cryptocurrencies. Not yet, at least, right? But I'm not confident in this anymore. With the way that he's been acting on social media, with possibly, you know, maybe a change coming. I don't think Elon really honestly cares too much about cryptocurrency. So just wanted to get that out of the way. Okay, last but not least, what was I going to talk about? Oh, we have this up. So listen, we have, I think it's more than likely that, what time is it? It's 8:22. I think it's more than likely that obviously inflation has peaked, right? I've said this now for at least a month, that it's more than likely that inflation has peaked. Now we're moving along to more of the, you know, more to recession fears. I think that's pretty clear. We're going to get some type of recession, but it's a weird environment right now, right? SPX is chopping. This is the E-mini S&P, so I trade futures, so that's what you're looking at with the ES. Chopping around. You know, we have one sec. Let me just turn this off. So it's possible that inflation peaked. But we have, you know, more than likely some pretty nasty earnings to look forward to. And, you know, the S&P is already like 16 times forecasted earnings. So multiples above what's to be expected. So still trading very expensive. And I think that it's reasonable to say that this is the part that's not priced in, right? So I think the next few months are still going to be pretty rough. I don't think that, I'm not really in the camp that the S&P is going to be breaking down much more. If we go back to, I just want to get the right timeline set up so that this is all in view. Okay, so this is we're looking at between November 30th, and this is back to this was Powell's speech. You had a lot of short covering, I think, that created this, very significant bounce, and then that brings us to, weaker inflation data over here, and then more recently, Powell and FOMC being seen as more hawkish. Market breaks down, loses market structure. You had Meister, so Loretta Meister, coming out and saying that they're anticipating, or she believes that the Fed funds rate should be above 5% for most of the year. There's just a lot of back and forth right now. Rates are up. Labor market looks strong. It's hard to be very optimistic right now, but it's also, for me, it's hard to be that bearish too. I mean, even though the market has, I guess we'll just get into looking at the charts right now. Even though the market has broken market structure, so just looking at this right here more specifically, even though we've broken down, I'm hesitant to start calling for much lower prices. And when I say range and chop, I think that all of that can take place reasonably within, somewhere like 35.5 and this sort of 41 region. So lower prices, yeah, I think it's within the realm of possibilities, and I wouldn't be surprised if we came back down to test these lows. But with inflation data peaking, and I don't think that, this is hard for me to say with much confidence because I'm not a macro pundit by any means. But, even though we have her saying that they want to keep rates elevated, I think the market's going to do a good job. And I think Nick Jovanovic talked about this last week. The market's going to do a good job of lowering rates itself, but I don't think the Fed is going to be changing anything in the near future. So with inflation data peaking, with possibly no more rate hikes after the next 2 months, I still think we're going to be basing out, right? I still think the market's going to be finding a bottom, and my thesis is a jumbled way of getting to the point. My thesis hasn't really changed much, with thinking that the market is good by Q2 2023, but that leaves us a lot of time, right? That leaves us a lot of space to continue to chop and even possibly retest the lows again. All right, so all that aside, what time is it? It's 8:26, so we did good time on that. I mean, I could talk forever, but let me just check the chat real quick. Yeah, it is near. No, I'm not moving to Mastodon. The right side of the screen is like broken. How is that? Let me just double check, see what's going on. Oh, that's weird. What is that all about? Oh, it's okay. So I'm happy that I didn't do anything because at least in that spot of the screen. Hold on, let me turn that off. So there's another, I normally have the ladder. So you see the mouse right now and then you don't see it. I normally have the ladder on that for some of the streams, and that is basically it's just another screen that's pulled into this screen. I'll fix that, so we'll get rid of that. There we go. Sorry about that. Just give it a second to catch up. Okay, all good. All right, so just looking at the market right now, looking at the S&P opening up in an hour. Like I said, broke market structure. The most important level on this chart for me, if we go back and we look at the monthly chart, This is, and for those of you who've been following for a while now, this was a prior composite range high as well. So value area high of what was, this is a monthly chart, so a 4-month range. You could see that this is a really important level on this chart. So it's, I should say, it's a little bit more clear on the monthly chart. So this sort of 4150 level. Market has had no business really above that, or rather it hasn't been able to spend much time except it above that. A little bit of confluence between this descending diagonal line right here and that level. Diagonal trend lines, like I said, you know, it's a good thing to put on the chart to get just an idea of whether or not we're kind of in a channel or prices respecting. Has been sort of moving at a certain pace over time, but they're going to break through just time alone, right? So just price moving sideways eventually is going to break any diagonal. Unless obviously this is a diagonal that's moving upward and we're below it. But this 4150 level, I still think this is probably the most significant line on the chart. You can see that I also have this weekly high now. We haven't been able to retake weekly market structure. So after putting in a high and having after a significant turning point and pivot, we haven't been able to retake weekly market structure for really anything that would be, hold on one second, let me just turn on my drawing tool. Turn the music down a little bit too. I don't know where we are in this playlist. Drawing tools on. We haven't been able to retake weekly market structure for any significant amount of time. You have this back here, sort of a series of lower lows, lower highs on the way down. Brief period where the market is accepted above that composite, or actually that composite was down here, excuse me. This is a much wider range. But we haven't been able to overtake and hold prior weekly market structure for really any significant amount of time and put in any kind of retest and, sign of strength, right? So sign of strength meaning, this is a clear rejection above this weekly level. Week that follows is pretty much one-sided. So there's really been no sign of strength above 4150. You could look at daily. You have that daily retest, but again, nothing substantial. And that's to be expected, right? The market's probably going to be continuing to move sideways. A reclaim of prior weekly market structure and significant sign of strength. And, we're looking at possibly a trend change. So I don't think that that's in our near future, by the way. So just to clarify, talking about the market's finding a bottom doesn't mean talking about or implying that the market's just continue to, the market's going to just about face and trend in the opposite direction at that point. So 4150 key level on the chart. As I said, breaking market structure locally. So for those of you who are watching the stream a couple weeks ago now, or maybe last week, talked about after selling off, there's always a throwback, right? So after a break in market structure, after a significant rejection, throwback, mean reversion, whatever you want to call it. So I was anticipating even when this level broke over here that we were going to have some kind of throwback. This was obviously a much grander throwback. But now we've broken market structure for the second time. So looking at this structure right here. So now we've broken it much more significantly. This is now probably at least in the near term, the most important level on the chart. I'd say right around 39.50. So being able to reclaim that weekly range, or that, this is multiple weeks at this point, but this is going back to middle of November, but being able to reclaim this range somewhere along the lines of, more specifically, let's say right around, start looking for signs of strength above 39.50. Otherwise, I think that acceptance below this structure is just going to lead us back to some of these more significant lows on the chart. So I think that as long as we are below 39.50 and there's no sign of strength below there, that I am bear biased and be looking to play in the direction towards these lows. So looking for opportunities to scalp short, swing short, possibly get involved at more of a better, more attractively defined position around this 39.50 if we have some kind of float back up there. But until we reclaim that, I think that this is one bigger picture, going to continue to chop. So I don't think that that means you should start talking about the floor opening up. We still have, there's a tendency, especially in crypto, to talk about much further out levels when we have a lot of business to deal with in front of us. But as long as we're below this composite, so just to give you an idea, looking at the profile, it is right around 39.35 for that point of control, 39.75 for the POC of this structure. But I think that reclaiming that 39.50 level would be a significant sign of strength on part of the bulls. And then I think at that point, you're just looking at playing this range again. So between 39.50, upwards of around 49.40, 40.40, 40.30. POC, naked POC is right around 39.75. Either way, below here, I think this sets you up for, again, some of these more local targets. So if you're looking at something like this chart, the 4-hour chart, I guess a little bit more clear, a little bit clearer. So as long as we're staying below there and this retest is successful and bears are in control, then something like 37.70, I'm just kind of eyeballing these levels. 37, I think that is in play before anything else. Hopefully that makes sense. I'm just going to use, for this morning streams, I'm just going to use TradingView because I'm trying to get a good amount of information in here without switching out too many windows and getting lost. Let's see. Bigger picture also, just to keep an eye on this. Quarterly view up. So this is where we're finding support right now. These are quarterly VWAPs and VWAP standard deviation bands. So, in a strong trend over a period of months, hugging that 1-2 standard deviation band is kind of expected. And now it looks like we're looking at more of, again, falling back into a ranging environment. But this quarterly VWAP right here is where you could assume that there might be a response, right? Because this is kind of the average risk over the last quarter, right? So again, VWAP, volume weighted average price, if you're looking at it over a day or a session or from some kind of anchor point, you're averaging out where the risk has been tagged on. So if you are, looking to get involved, this is usually an area where there's an abundant amount of liquidity, but it's kind of like diddling in the middle. It's probably a good brief scalp opportunity here, but as long as we're above it, big picture, the trend is, normally I would look at VWAP and say, as long as we're above it, bulls are in control. If we're below it, bears are in control. And you could just think about it from a positioning standpoint, because for the period where we're above this, if this is our average risk for this time period, you could assume that a good amount of positioning is, in the money or in the green, or at least not underwater. And you begin to change that when you're losing that structure on a high time frame. It's more than likely that a good amount of positioning grows stale and you have turnover. So it's not like this is immediately actionable, but it is a sign of weakness when we begin to lose the structure. And obviously, we've had other signs of weakness for, that would be cause for concern. But either way, that's where we sit right now. What else did I want to touch on? All right. So over the weekend, or rather, let me just put on some profiles. So I had a tweet up. So market responded, obviously, this is back here, I believe. Market responded immediately negatively to Messer's speech. So again, talking about keeping the Fed funds rate over 5% for much of 2023. I don't know how much you want to listen to the Fed, because they said a lot of nonsense in the beginning of 2022. I would say that I anticipate that, or let me just finish that sentence rather. I don't know if you want to give too much credence to what they're saying, because what they're saying and what they actually do can be vastly different things. But what I would say is that if I was going to assume any course of action over the next few months, it would be that they do what they did in terms of responding to inflation with responding to worsening conditions. So they were late to the ball with responding to inflation, and I think that they'll be late. I don't know if I want to say late to the ball, but they will be late to responding properly to worsening conditions in the same way they were late on the way up or on the way down. I'm getting confused right now. I think you guys understand what I'm saying now, right? They were late to act, and I think they'll be late to act to any kind of worsening economic conditions as well, as far as taking some kind of pressure off markets, reducing rates, all that. So stopping the hikes doesn't mean that, that doesn't mean cutting rates. I think that I think the market is going to cut rates before the Fed actually does anything, right? So look at treasuries for them to begin pricing that in before the Fed actually does something. So opening up within value, right? So we opened up last night, still within Friday's value though. So we're looking at between 38.93 and 38.64. Not expecting a whole lot on a Monday. For Bitcoin, so again, as far as big picture goes, as long as we're below this range, and it's much clearer now looking at it the 4 hour, as long as we're below the lows of the structure, I'm anticipating us to kind of clean up on the way down to that's 37.50, where's specifically the lows, 37.49 maybe, but us continuing to clean up in that direction, right? So clean up, what I mean by that is just this is a gap and to fill out that inefficiency. So, and this is going back to, was this the last CPI? What was that? Can't remember exactly. So still biased downward. Let's see if there's anything else I want to say with this before I get to crypto. There's other points I want to make. There's no real gap between closing price of the S&P. So we're looking at closing price of the S&P at 38.52. ES, yeah, it's just 30 points above that. Yeah. More often than not, I mean, especially in this current market structure, I would, or rather with this current market structure, if we have a gap to the downside and, the S&P opens above and I think that's just a clean setup or a clean way to define a bias. If we start accepting into that gap, the market's not open now, so I can't draw the hypo, or I can rather. So let's say the market opens up here, right? S&P right now is at 38.80, so slightly below. But let's say we open up, spike up, and then you start to see the market losing footing, and bears start to show sign of strength into this gap. So at that point, I think you have at least in the short term, something that can clearly define your bias until that is filled. And it's been the case that we've every time we've done that, we've pretty much filled the gap from the weekend. And in the few cases we haven't, it's just been a matter of like marginally not filling it. So coming back down to just barely tapping it or hovering above it, and then reversing course. So the point is, though, if we do open, the market is, in a tight balance, spikes up, and then we get some kind of reversal into that gap and starts to look slippery in that gap, I would just anticipate that 30 points gets covered. So if you could define a trade around that, all the better. Something that I think should be front and center right now, and I mentioned this 2 streams ago, if you're getting overly optimistic on risk directionally, and I'm talking about things that are outside of just intraday plays, and even this is obviously having an effect on price action intraday, just be careful. The dollar had a significant sell-off, but now it's time to start paying attention again, because this is a multi-year level. So we're looking at 2016, and then we have 2020. There's a whole bunch of confluence up here for this area acting as resistance more or less loosely between 103 and 100. So testing one of those extremes right now, a period of balance. It's weird when you say we're looking at a monthly chart. So over the course of this period, the market is in a bracket, right? You would call this, like if this was an intraday structure, if you were looking at a profile, it would look very balanced. But within this structure, obviously have very long, what you could even call sort of primary trend moves for those years. But either way, first significant change outside of the structure in over a decade. First significant retest of that structure. Even if this was, this major sell-off was going to lead to the dollar reversing, I think it would be very unlikely that this level just gets smoked and done away with. Right? I think that more likely it would be, that the market retests this level a few times, puts up a good fight, and then breaks down, right? Sort of to be determined. But I wouldn't want to be overly positioned in risk when we're closer to this, right, than if we were showing signs of failure up here again. So just something to keep in mind, because as I mentioned 2 streams ago, 3 streams, I can't remember exactly when. I don't remember the last time I streamed. The dollar and risk hasn't always had an inverse relationship, right? So if you look at equities and you look at over like the last couple decades and you look at the dollar, it hasn't always been the case that there's a perfectly inverse relationship, right? Equities move up, dollars down, dollars up, equities down, yada, yada, yada. We've had strong equity markets, strong dollar for obvious reasons. But it has been the case more recently, right, in the last year, that they've had an inverse relationship. So when the dollar moves up, immediately you look at intraday price action, lower time frame price action, they're just moving lock and step in the opposite direction. And there's been some behaviors that I've noticed where there is a little bit of I think alpha to be generated in the lag between that relationship and BTC. You could kind of use your imagination and guess as to what that possible relationship might be. I should just clarify before it sounds absolutely ridiculous. There's been times when I've noticed that the dollar will move on the low time frames with conviction in one direction. Like, let's say, for example, and I have to look more into this. I've just been focusing on this more recently because I've gone back to trading index futures as of the last month. So I don't want to say anything with much certainty, but let's say that the dollar has been moving down, right? We're consolidating and then spikes down, and equities, as that is happening, have been doing the opposite, right? The opposite would be something like this. Let's say there we go. Trying to draw this opposite of what that is. I'm already fucking up. All right, so dollar has been consolidating, spikes down, and then puts in some kind of reversal and reclaims, like, let's say, lower time frame market structure. What I've noticed is, and this could be absolutely bullshit, is that when this happens and there's a reversal, it seems like there's a slight lag in equities faking harder in the opposite direction. And it's enough of a lag to where this begins to move with a bit more conviction than the S&P is responding, and then the S&P always responds. So if the S&P is sort of bracketing similarly, the stop hunt or the reversal will be I can't draw. It doesn't make sense for me to draw because you'd have to look at the time frame that it's changing on. But there'll be a slight lag. So it'll almost look like the S&P is going to shake. I guess the best way to describe it is going to shake off what the dollar is doing briefly, but it's never been the case that it's persisted. So sorry for the sort of mumbo jumbo, because it's not something that I've really looked tremendously into. I've just been focusing on it recently. But it might be something enough to act on if you're sort of just an intraday scalper, right? Obviously, it's not going to mean much if you're trading outside of those time frames. BTC. So real quick, funding negative right now. If you look at predictive funding, it's a bit of a different story for just a few markets. But if you look at like OKX, Huobi, and all of those added in, it leaves us with now it's going positive, excuse me. But funding has been negative after the move down. I don't think there is any major buildup. Hold on one second. In positioning to say that we're looking at some kind of massive short squeeze or anything like that, or after the breakdown, open interest has been more or less in the same range as price. So nothing really stands out from a positioning standpoint. I think it's obviously always important to take a look at funding if it's been persisting in one direction and price has been more or less flat. you get some insight into maybe some possible crowding. Market has been stuck in a range for the last 3 days. It's been the case for the last, let's say, month and a half, month at least, that if the market's put in a move on Sunday, right? So if the market has put in a sort of high conviction move on Sunday, that we've had some kind of reversal on Monday. This weekend was flat. So we're looking at, today, obviously, yesterday, Saturday, this weekend was flat. So your work's kind of cut out for you when it comes to the break outside of this area of balance. Leaves us between like 16,770 and 16,655. Super tight. Everything is really tight still. So it's not that attractive to trade when the 30-minute range size or on average for BTC is $30, is $39, $34, $44. These are the conditions are gross. It doesn't mean it's not tradable. It doesn't mean it's not tradable. We're finally at the point where you might be approaching levels for investors, but it's been a tradable market for all year, right? It hasn't been an investors market all year, but it's definitely been a tradable market. But it is getting uglier and uglier, and it's possible we get to a point where, things are so compressed where we have like a 2-week period like 2018 where nothing happens, and then we finally get a big break. But weekend activity, flat. Again, Sunday movements in the last few weeks, or as of the last few weeks, have been, if you were short on Sunday and into Sunday's close, look for the reversal on Monday. If you were long Sunday, market moving up after the open, futures open, look for the reversal in the opposite direction. It's flat right now. So it's not like, and again, this is just as of recently, so it's not like you could really hinge too much on that data. But again, something to take note of. Flat, nothing really standing out right now. The break from balance setup is not as attractive when the ranges are really tight. And it kind of sounds counterintuitive because when you have really tight ranges, you're looking for some kind of expansion outside of that. If you have really tight balance, rather, the most local levels. Hold on one sec. So bigger picture first. So we went over in the last stream, we talked about the break outside of this monthly structure, so it's ugly. Retest on the weekly so far, looking like bears are still in control, so it's ugly. Just kind of touch on some of the points. High time frame, where was it? It was around 19,000 for the POC of this entire structure. Reclaiming that to really, get a little bit more optimistic. Otherwise, so far this is still a successful bearish retest, right? The play up to that gap, we got that, didn't cover it entirely, but the underside of the structure, when you look at it on the daily or the 4-hour with a little bit more resolution, this is a significant move through that gap that even in the most bearish conditions, right, you could be long biased into that gap from one side to the other. But until you reclaim that gap, there's no real reason to hold any kind of long positioning or be overly optimistic, because even in a really strong trend down, you're going to have throwbacks like that, right? That are going to mean nothing with respect to the high time frame. Just looking at this on the daily right now, retesting one of these key daily levels. So that's right around 1617, but we're kind of just sitting between an area where we didn't really establish value previously. So you have this little composite right here between 16.6 and 16.4, formed another composite between 17.2 and 16.8. Didn't really spend much time at all between 16.8 and 16.5. So more or less just filling that out now, right? So low volume area when the market is ranging, when the market is chopping. If you accept into one, just expect the market to build some kind of value within there. Where the market sits right now, no trade zone because of that, right? It's just finding balance within the structure, within two areas of brief balance. I think that the best opportunities are probably into the extremes. So something that is either accepting back above 16.9 So let me just zoom out a little bit. Back above, so 16.9 is right here. Looking at basically the extreme of this structure. So back above, I'll say right around 16.9. Look for signs of strength there, or because similar as the S&P, right? Or similar to the S&P, if the market is able to reclaim these range lows. So sometimes I draw too fast, and I know that, you know, you guys are looking at price levels when I'm drawing, but I'm just really just trying to identify kind of a region. Similar to this idea, right? But for BTC, if you're able to accept back within this range, you know, it's a multi-day composite, sign of strength into that, you know, sets up. I would be careful being very optimistic about getting this rather than maybe the small scalp between 16. Where is that? Hold on. Am I saying the wrong? Oh, it's because this green line is, I don't know. I accidentally hit that. I mean, that's not really much of a trade. I'm looking at the value area low of this structure, and I'm thinking this naked POC is going to be the first area of stickiness. So maybe if you get something that holds that level and then continues to, then you look at range highs around 17.2. Yeah, I guess that makes sense. I'm just thinking, hey, maybe the best opportunity is to only expect, or not thinking the best opportunity, but the smart thing would be to only expect maybe this, or to, I should just say, rather than setting up for disappointment, to only expect maybe the halfway through the range, because this is quite a ugly failure. And if the S&P, I guess it all hinges on the S&P. If the S&P continues to trade below 39.30, 39.50, reasonable to expect that this continue to just move lower as well. So that looks like, does it have the old data? No, it doesn't scroll back that far. So something that accepts below 30, 16.6, 16.5. No, that's much lower. 16.6 to 16, 580 region. Just that's prior composite value area high. So if the market starts getting slippery below these lows or at these lows into that excess, I would just start looking to target 16.4 and probably 16.2. This is in the short term, right? Immediate targets, maybe first sticky points. I think that just everything is my 2 cents, right? I don't know why I was going to say that. I think that given the rejection, what am I doing? Hold on. Let me turn some of these things off. I kind of fucks with my head when I have too many things on the chart and it looks a little busy. Okay. I think the more pressing detail right now is that, and you could even, if you're using fibs, see we're kind of hanging out around the midpoint of the range. More pressing detail right now, I think, is you reject at a key level, right? So multi-month resistance, more or less an area where you wouldn't expect too much resistance. We accepted above that, got the full extent of that throw upward, and now are back within the range at the midpoint. And just 9 times out of 10, when you have that, it might take time, right, to move from here to here. But in this environment, I would almost always expect it to. So I think that's probably me hesitating to say that brace for impact. We probably test the lows again. I mean, this is not exactly the best looking low. So just consider that. This is kind of, I shared something recently. This, it's not exactly perfectly similar, but we had a structure back here that consolidated for a bit, had a strong move up, and then looked, it was retesting a prior lows as well. And then just continue to nuke off. I mean, in this case, it was retesting. This is a major break back here. But, you know, similar idea. Big area of market structure is lost. Expect a retest. Don't get overly optimistic until we reclaim. It's doing its job. This consolidation now becomes a good area to trade within in the short term. But the rejection at the high usually just sets up the targets at the how should I say this? I don't want to take them for granted, but it's a very high probability, in my opinion, that we test these lows. So nothing within here seems attractive because we're just filling out an area where the market has not been accepted previously. Briefly tapped, obviously, right? You know, these are kind of the areas where you would look to get involved if you were going to ride in the direction of this strong move upward. You know, low volume node, if you're creating a profile that looks like that, you'd look to get involved in these low volume nodes. But accepting back within them, filling it out and establishing some kind of value seems to be what we're doing. You know, similar to these brief periods of value and balance that we established. So I think if the S&P, if we have some kind of move up that's rejected and we start accepting into the gap, the weekend gap, I think that you could just expect this more or less to follow. These have been moving together. So people talked about the correlation being gone. It's not. It's very brief periods, but for all intents and purposes, the stronger case has been that it's existed. So if the S&P continues to move down, especially this is just a market right now that it's highly uncertain about the near future. Yeah, recession is already here. Well, earnings, you know, not earnings data. There's a good amount of data that obviously flies in the face of that. It's obviously getting worse, but for the last few months when people were saying recession was here, it didn't quite look like that necessarily everywhere. So I'm just leading into the open. If I had to guess, I think that we probably cover the the weekend gap. I was going to say the overnight gap. Cover the weekend gap in the S&P. And I think as that happens, I'll look to play the short side of that. And if we continue to show signs of slipperiness, maybe one of the better trades for BTC sets up, which is probably some kind of, I think, let's see. So you have this balance right here between two areas of balance. It's almost like that whole area. So there's nothing really right there, but a continuation play below these lows, I just think sets you up for some kind of cascade because you have two very obvious targets. Sorry, just thinking out loud, but my thoughts are not all formulated right now. I think I said everything I wanted to say. I'm trying to keep these brief and speed them up, so apologies if I'll try to for future streams tomorrow. I'll have a few more notes that are written down and organized. I feel like that'd be a good idea just to display those in the beginning. Rather than, everyone knows I like to speak, I like to riff. I like to, I guess we would say, instead of riff, we say speak extemporaneously. Sort of unprepared and, well, prepared, but for the sake of these, since they'll be brief, I will make notes that will just display. So even if I sort of, because I'm just trying to think right now, am I forgetting anything? Oh, keep an eye on BNB. This is probably a good indication of Binance's health, by the way. You'll see how many people gain confidence again if we have a significant reclaim by BNB, or a significant sign of strength, at least in the near term. But keep an eye on this anyway, because right now, I think there's probably a lot of people that are betting on its failure. And you know that you just don't get any free rides. Unless it's Luna, which was a free ride, right? Annualized, that basis was atrocious. You would normally say, oh, let's fade that, right? Everyone is short, but that turned out all right for them because that thing died in a matter of days and hours. But with BNB, just take a look at this. Since the FUD, I mean, funding and then open interest, more specifically, just massive increase. And we'll convert this to USD. It's stablecoin margined. I mean, you're looking at, let's say, from here, from 283 down to, 219 was it? You got like 100 million plus in risk tagged on. So possibly a nasty short squeeze. But I think that'll wrap it up, guys. I want to keep these brief. Tomorrow I'll have a little bit more bullet points that are organized that I'll display in the beginning, so I make sure that I don't have to remember things on the go. And for the sake of expediting these as organized and fast as possible. But until then, I think that's that. ETH and BTC, I think the correlation right now is back, so no signs of strength by ETH against BTC. You can look at the ETH BTC chart, week with Bitcoin over the last week. LTC, one last thing, I guess, because I have this on my chart still. I don't know. I think that this ends up being, it all depends on Bitcoin, right? Do I think that this ends up being like this back here? I don't know. I don't have to know. But what I do know is that as long as we are below, or rather into this prior range, so I think it's more like 70. As long as we're back into this range, I think that you're looking at the same thing for everything else, which is a transition back down. I don't see why LTC should hold its value. There's a lot of stuff. Go to CoinGecko and look at all the things that have over $1 billion market cap and tell me why they should, if we're going to go into a period of sideways and continued bearish conditions, especially if things move down even more, right? Because it's not out of the question that BTC moves down more. Then that, if you're trading just on market structure, you look at this and you'd say, all right, so we're not holding the high, so the next major area is 12K, 10K. But all right, guys, that's it. Gonna wrap it up. Tune in tomorrow, 8 o'clock, same time. These will get better as we go. Just trying to be very fast. The open is in 24 minutes, so